Hey guys, Brett here with Numbers of Finance. We're doing a market wrap for Wednesday, April 24th. As usual, we'll be starting off by taking a look at the daily chart here for SPY. You can see a red candle here. We closed below our open and also below yesterday's close. No engulfing candle from yesterday's gains or anything, and no big spike in volume yet. We're still pretty low. So this is nothing more than what looks like just a correction from those gains yesterday. Switching over to the hourly chart, nothing too special here. Our highest volume occurred around 9:30, 10 o'clock, pretty close to market open. We see like a pretty flat candle there, but some wicks down and up. You see this big wick down around 10:30. That was pretty much our volume spike for the day. Whatever that was bought back into. You can see volume flattened out for most of the day until close. With that volume spike at close, obviously there's a big sell-off, and that's pretty much what resulted in our red candle for the day. From market open, I think we dropped about, just about 0.3%. So not too big of a movement today. Overall, the volume spikes that we did see today, though, you can tell that they're lower than some of the volume spikes in the past couple of weeks. So with low volume, we're still not going to see any bearish sell-offs, because those are typically going to be higher volume and a little bit more volatile and reactive. Over to the weekly chart. I'll pull the MACD. We can see divergences that are they're still in play. We haven't made a higher high in the MACD at all. Those divergences are definitely still going to support the long-term bearish case. So far here on the histogram, these last 2 weeks have been lower, so that's going to show you that at least this peak in the MACD here is kind of making a topping pattern. When those green sticks are lowered, those show the separation between the white line here and the MACD line. So as those continue to decrease, that means we're losing space between these, which is kind of showing that blue line is going to start curving soon. If we see that MACD histogram stick closing lower again this Friday, again this is the weekly chart, so Friday will be the close. That'll be a better case. It'll make the bearish long-term case a lot stronger, because obviously that divergence is still going to be in play. While we are still pretty flat with prices, this first peak here on the MACD is back here. We're higher than that, and MACD is significantly lower. The lows by the end of September, we're even lower than those in the MACD, and about even with them now. We're coming really close to this annual high. So in the near future, this price level from those highs in September is definitely what you'll want to be keeping an eye on. That's definitely going to act as a strong point of resistance. If prices do break through there, there's most likely going to be some impulsive buying. We'll see a decent sized green candle. Whether that be on the weekly chart or daily chart, I would hope it's just on the daily chart. A weekly close over that resistance could be something a little bit more solid, but just a day closing above that could just be the impulse move. If it is only that daily close above, definitely be sure to come check out our channel. We'll probably be posting a trade idea for shorting opportunity. Other than that, though, if prices seem to consolidate, still with this low volume for a little while longer, there's not much to do but sit on your hands and wait. Risk reward really isn't in your favor, longing anything, especially during consolidation, and you don't necessarily want to jump the gun and be in a short while the market's making an impulsive move through this resistance. So while volume's low, sitting on hands is probably the best option. So hope you guys found this helpful. If you got any suggestions, questions, or comments, leave those below. Drop a like, subscribe even. That helps us out a lot. So check in tomorrow for these daily analysis and get your numbers up.